So welcome to Jean-Marie Mognetti, the founder and CEO of CoinShares.
Thank you for having me, Laszlo, in your lovely Austin Tower style chair.
Yeah, it's the new office. Can still smell the fresh painting around you, it seems.
It's good, you're growing, it's new, so.
Yeah. Before we dive into our favorite topic, DeFi, let's take a moment to celebrate 2024 and its recent achievements, because you are pretty close to 10 billion AUM.
We are pretty close of 10 real billion AUM, not vapor money. So yeah, it's real client money. So we are very happy to get closer to it. It's just a milestone. So ambition is to be much, much, much bigger. So, trying to one step at a time grow this company.
And we'll talk about your ambition after. I think you mentioned in your weekly report this week that digital asset investment products saw a continuing inflow of 3.2 billion last week. And it's the 10th consecutive week we see year-to-date inflows reaching an impressive $44.5 billion of inflows. What a year.
It's a good year. I think we had previous record was this year 11 weeks in total consecutive weeks. I think the previous record was in 2021 with 15 weeks of consecutive records. So let's see. Well, based on the price action today, I think we are putting a hand to the continuous flow, and we'll see what happens next week. But it has been a very good year.
Right. So before we deep dive into CoinShares this year, next year. Maybe first question, simple question.
Decade.
You said?
Next decade.
Next decade, sorry. To the moon.
Hopefully.
To Mars and come back, let's see. Yeah. What has been, like, can we deep dive a little bit on your journey in crypto and how did you enter crypto in the first place?
Oh, make me feel like a dinosaur. So we were community trader. So Danny Masters and myself were trading community with our third partner, Russell Newton. And they started the company in 1998. They were seeded by Louis Bacon from More Capital. And we drive the commodity super cycle until 2012. And in 2012, 2013, the market is starting to fade out. Clients are asking for something else. And we didn't really have an expertise or a kind of something else to sell, but commodities. So the idea of selling debt, private credit, or long-short equity product was not really for us. So we said, well, let's give the money back to our clients, but let's not give up the licenses because it will take us forever to get it back. The partners have a good relationship. They, my two business partners work together for 30 years now. At the time, it was a bit shorter, but their business relationship outlasts every single one of their weddings. So it was a good business relationship. And we said, well, that's pretty rare. So let's keep that. Let's keep the licenses and let's think what next. And, I'm the younger partner. They are, 20 years older in general. And so their idea was like, we are commodity people, die hard commodity people. That's all we know. And, so we forced a bit of myotic and psychoanalysis on that and discover what it is all about. And the reality is like they have been and we have been deep value investor for a very, very, very long time. And in general, the longer you call us crazy, the better we invest and the harder we invest. And, there is interview of my business partner in 1998 in Barron's and Bloomberg saying oil would be worth $100. And everybody was calling him crazy. He has a very good fact to justify it. And so we enter crypto a little bit the same way. We saw crypto, we find crypto, we discover Bitcoin more specifically. And once we discover it, it was pretty obvious to connect the dots with, the benefit of insight. Well, maybe we didn't buy enough of it and we should have just buy crypto and buy Bitcoin and go to the beach. But we decided to create a company. But more interestingly, we discovered Bitcoin in a very bizarre way where Danny was in Florida and heard Bitcoin around the golf course several times where he was practicing his swing. And I was in Hong Kong visiting some friends and I ended up in a Bitcoin mine in Shenzhen in a complete health hazard situation. And I was like, that's interesting, but it's very unsafe. And we both come back to Europe and we talk about it and we both hear about it in a different kind of way than we in 2013. And we start looking at it, and it looks like oil market in the 1980s. So well, it's patchy, it's illiquid, it's trading in different exchanges. So it's basically a physical commodity trading environment, and we know exactly how to operate that. So that's where we started, and then from there we start building more and more stuff, and CoinShares was born, and the rest is story.
TLDR, you're looking at the market. It's not looking great since 2 days. Do you have any views on this?
Look, it was very, very extended. There was a lot of leverage, so it's time to flush a little bit and consolidate. So nothing to worry about.
Right. Coming back on my initial question, do you think there's any direct link between a commodity trader and crypto trader, or crypto in general, and commodities and crypto?
I think there is an easy bridge between commodity trading and crypto trading, especially between physical commodity trading in the early days and crypto trading in the early days. Like, crypto trading in the early days is all about where do you move your coins, where do you park your cash, and how do you minimize your credit exposure and your counterparty risk. So you start opening bank account in every single country where the exchange have a bank account, and you start moving coins from one country to another and cash from one country to another, which is basically the same thing as a physical commodity trader, which has ship in the right terminal at the right time, ready to load when it's necessary, and being able to go the right direction depending on the offer and demand. So it's pretty much the same thing. It's an operational business. It's an operator type of business first, on which you build risk management.
Interesting. And coming back to CoinShares, and the globalized strategy you had, because you are the largest ETP provider in the world, if I'm not mistaken, the largest in Europe for sure. But it seems ETP is a very European product. First of all, do you agree with this? And second is, like, how did you come to be that successful over the years?
The ranking is always moving, and it's all about how people are counting stuff. So let's not make some assumption on the counting. We're definitely the largest one in Europe for the time being. If BlackRock until next year, they probably cover a different pocket size. But we are the biggest one right now in Europe. Your question about ETP, ETF, ETN, everything is an ETP, effectively. So all the E something or ET something are all part of the ETP family. And inside the ETP family, you get the ETN, you get the ETC in Europe, so ETN, ETC, and then you get the ETF. Realistically, they kind of all do the same thing with some kind of different bell and whistle checks. But the real differentiation is what kind of market access do they give you. To make it simple, an ETN is a dead product. You are facing the credit risk of the issuer as a client. An ETC effectively is a ring-fence issuer, so all the assets are ring-fenced inside, protected from the balance sheet of the investment company. So if there's a default event from the company, the asset of the client are ring-fenced and protected. So much more safer, and what traditional heavyweight investor will want to see as part of the operational due diligence. And then the ETF is between ETC and ETF is kind of a adjustment, especially in Europe. And it's a question of, like, how the distribution mechanism works. So there is no real, it's like kind of a legal differentiation, but nothing more. At the end of the day, from a client perspective, whether it's an ETF or an ETC, you don't really care. The question is, like, can you buy it easily? Versus an ETN, it's a question of credit risk.
Yes. Okay. So definitely the ETF protects you more. And why don't you think we have ETFs in Europe, for example?
Because ETF in Europe are funds. Okay, so it's exchange traded funds.
Yeah.
And funds in Europe are distributed through a different mechanism than can be distributed on ETC, and are classified very differently. And so it doesn't give you the same, I would say, benefit from a client acquisition perspective as an ETC.
Right. Do you think this could change in the future? And
no, we have an ETF in Europe. I think there's a small company called Jacobi. It's not, you can't distribute it because the legislation around it make it impossible. So if you look at all the gold ETF in Europe, they're all ETC. They are called ETF by simplification, but effectively they are ETC. So effectively what I'm saying is like the market is confused by definition because nobody but in crypto has been doing all this kind of homework to understand all these nuances. But they're all part of the ETP family. They're all distributed in different ways. Whether it's an ETF or an ETC doesn't really matter for the client.
Right.
What the client wants is to be able to buy, to click and buy or to click and sell as quickly as possible.
Right.
In Europe, an ETC is a framework to do that in an easy way. In the US, the right framework is an ETF.
Is ETF, okay. And 10 billion AUM, close to. How did you come to that success? How did you just distribute the product the past 10 years?
Let's not lie to us. There is a factor of luck, but there's also a factor of hard work. A lot of hard work. We're the first one to the market. The first one to the market came with an acquisition in 2016. It was a bold move for us in 2016 to acquire this business, not knowing much about how this business is working from the get-go. We effectively acquired a distressed piece of asset. We flew to Sweden in, I think, 10th of June 2016 to buy a business on the 11th. And the only check we had the time to do was to make sure there was an asset in the company to match the liability to the market. All the rest was on the promises that we can probably do something with it, and if there is some cleanup to do, we will do it. So it was a big gamble, which is the kind of stuff we like. The risk reward was skewed in our favor, so we were very optimistic about being able to turn it around. And so we started this way, and then we were first to market. So first to market gives you a lot of, first mover advantage. And then you can't lie to people. The price factor in crypto is extremely important. So you can collect AUM by selling it to people. When the market go up from where 2016 price, where it's trading at like $300 to on the low, or like $1,000 on the low, and go back to 20,000 in 2021, your asset follow same price action. So you can have a very successful team, a very successful acquisition team, which demonstrate that the strategy of acquisition works. However, the effort of this team would be very much dwarfed effectively by the price action, especially in crypto. It's not the case for everything, by the way. Like if you were doing gold, your collect effort are very, very important and will show much more in terms of part of the growth. In crypto, it's a little bit different.
And who are the type of clients buying it? And do you feel they buy it because they want to access uncorrelated assets compared to the rest of the assets they are exposed to?
So in Europe specifically, I think our clients are living on or around the line from Stockholm to Milan, with a very strong, I would say, Barry center around the ACH. The composition of this client beyond the geography is unfortunately mainly male dominated. The diversity, the kind of women trading or women part of the investment process is still very low. We have some data on Sweden. It's like absolutely shocking to see how women are falling behind in terms of investment capacity and education towards investment. And we're trying to.
You did a publication on this.
Yeah, we published something because when we saw the data, it was so bad. It was like so shocking that we feel the need to, okay, how do we address this problem? Because, at the end of the day, we are trying to create financial freedom through our product, and financial freedom should be inclusive and not be like only for white pale male. So it should be like, okay, how do we bring as many people as possible in this journey? And what we feel sometimes is like crypto is a kind of rich people problem, and like when you have to work 3 jobs at the same time to pay for your studies or pay for your life, you don't really have time to think about crypto and think about this stuff. So we're just trying, with our own little capacity to just try to educate people, and that's why the educational research we put online is very important. We try to translate it in many languages to give it access to many people, and try to keep it simple as well. We could make it very complicated, very abstract, and very unpalatable, and we try to keep it, simple and understandable.
That makes sense. And do you feel your distribution platforms? Can you talk a little bit about them in Europe? and maybe after in the US, because I'm sure they will be different? And why are the banks not distributing your product in Europe, you think?
So just to come back on your first point, which was like the composition of clients and how the clients are. So
Yes.
just to finish here, because it's going to help linking the next question.
Mm-hmm.
When we started in 2016 was like probably 500 clients, and the 500 clients were all Swedish people living basically in 10 kilometers, square kilometers around Stockholm. That's basically it. So not a very big concentration of clients, very retail, absolutely no.
Where would they buy it?
Because a lot of Swedish. So if you look at the story of Sweden and crypto, Sweden had the very first mining company in Europe. So KNC Miner was the biggest mining company back in the days, the bigger chips designer in Europe in the days. They were backed by Axel. So it was kind of a very kind of proud moment for Sweden. It ended up like no fault, like in bankruptcy, but it was kind of one of these innovative side of Sweden and Stockholm, where they were able to bring innovative stuff to market. So a lot of people associated with this company, which I think at the peak was employing 500 or 700 people, were kind of like indirectly or directly connected to it. And, you know, we met people in Sweden who were mining in their garage, and they were not kind of like the usual mining guy you would expect to see. So very diverse, very kind of investor technology friendly country. So nothing surprising, you know, to be fair. And from that, we evolved to effectively much more European diverse, as we discussed, still very retail. And as the days goes by and the year goes by, we saw a client mix starting to change, where small institutions start to arrive. And by small institution, we're going to talk about, you know, cutting edge family office, you know, like kind of family office thinking, okay, how do we make more money for our principal? And then the family office of this very first family office in general are the family office of people which are working in finance. So all of a sudden they start influencing some smaller financial institution, not the kind of big giant, but like, you know, one at a time. And then eventually we get bigger ones. So today in CoinShares clientele, you see everything from a mom with 2 kids in your home in Sweden to a massive you know, pension fund or an insurance company. So it's kind of a very spread. However, we still have very little insurance and pension fund and a lot of single mom with 2 kids. So it's kind of a very spread out.
The pension fund volume, I guess, is increasing.
Sorry?
The pension fund volume, I guess, is increasing.
It is the demand for it is increasing. The homeworks around it is increasing. The conversion is still slow. So despite what you see about, okay, institutions are coming, it's true. Like even if you look at BlackRock ETF in the US filings, you know, you have, you know, like the massive amount of money is with retail or retail-y kind of hands.
Still,
you still don't see, you know, an allocation from the firefighter pension fund of New York. You know, there's plenty of, you know, big money name you don't see yet. You know, so one day will come, we don't see it.
And where these retail customers can access it, on which platform they can buy it?
So it's not so much on which platform. It's like all these retail investors have a brokerage account.
Right.
In general, we tend to see there is a strong correlation between people buying us and the welfare system of the country. So a country like France, where the states take care of everything, and they pay you at the end of your life for a little retirement plan, tends to do nothing. And traditionally, the investment capacity in what we call self-investment facilities in France are pretty low. And you go to other country where it's much more kind of self-directed, like Germany or
Netherlands,
or even better, the Nordics, where the states say, okay, you can manage your money the way you want, and we're going to incentivize you to keep managing it by tax break and fee rebate and all this kind of stuff for the trading action. Then you see a lot more trading activity. So effectively, that's why the Nordics market is a very powerful market. Was the SCH market is very powerful as well. And then how do they access it? Is they have self-directed accounts, so with their brokerage house. So typically in France, you will have an account with, I don't know, Boursorama. And in Boursorama was forward thinking, they will give you access to this kind of product. In France, it doesn't give you access. But so if you move to another country, you're in Germany, You have an account with Scalable, for instance, or an account with Trade Republic, another example, or Finanzen. Well, there's so many names in Germany, it's unbelievable. You can just access the product because you can find the product, click and trade, and during market hours you can do whatever you want.
Interesting. Do you think it's related to why the banks haven't been massive distributor?
The bank have not been massive distributor, first of all, because there is a syndrome of not invented here. So it's not their idea, and so they are scared about what they don't know. And then, crypto, despite what the regulation is saying and changing, is still on the no business targeted company by the compliance team. So until the compliance policy evolved to make sure that the business is okay to engage from a commercial perspective with crypto activity, well, then even if they want to do it or they have the regulation to do it, it's not going to evolve. There is still a lot of resistance from European banks on that side, so it's changing. They're all doing stuff and they're all moving forward. We saw Société Générale and Forge doing stuff in France. So you see stuff happening.
I think even BPCE, Banque Populaire, announced that they are getting the PSAN license to offer a buy and sell of crypto. I think today.
So it's all moving in the right direction. It's all one tombstone at a time. You just kind of keep moving, and eventually, all these banks will integrate crypto one way or another into their tech stack and into their product offering stack. It's just not just there yet. So will take a bit of time.
Right. And in terms of product structure, this is a topic we discuss quite often. How do you strategize? What do you want to offer? Which cryptocurrency, which coin? How do you put it as a staked product or non-staked product? How do you strategize?
How do we strategize? It's a strategize on the constraint. So it's not like you can say, okay, I want to do, let's talk about staked Bitcoin, or I want to do Babylon or Core DAO. You can do stuff which are super cool and super interesting.
So why can't you do Babylon, for example?
Well, before we go there, let's go one step back. The decision grid is as follows. It's like, one, what are the clearing facility we are using, i.e. Euroclear, Clearstream, and DTC in the US will allow us to put as a product. So all these guys, which they never do before, have a list of coins they think are okay and not okay to clear. Okay, so they never do that for all the securities, but for crypto they do that.
And do they have a list of coin because they're making this list as you come to them, or they have a preconceived view of the market with a list of coin before?
So they have a preconceived list of coin from a reputational standpoint that they feel comfortable with. So typically Monero is a no-go. But so that's the reputational factor, and then you can influence that by talking to them and explaining that. But sometimes you win, sometimes you don't win. And sometimes they are in the mood to just amend the list, and sometimes they're like, we don't have time. So you get the clearing factor, then you get the second factor, which is the exchange factor. So what are the exchange going to be able, like the traditional exchange going to be able to accept as a listing, because they're all going to play the game of we have a reputational risk by listing, you list, I don't know, Pepe coin. Is it going to be a good idea? Like, you tell me, and the exchange will see the same stuff there. And then you get the third grid, which is the regulator, what the regulator will allow us to put in the prospectus. So typically privacy coin, you can forget about it, because the regulator will have a big no-no on that. So that's kind of creates you an intersection of universe already. And bear in mind that different custodians don't have different clearer don't have the same list, and different exchanges don't have the same list. So it's a moving list. And then finally you get what our team is seeing as interesting or not from a client demand perspective. So sometimes they are right and sometimes they are wrong, because typically, Solana, I give an example. Do we have the right sales team to know if there is a demand for Solana? Well, our client don't know about Solana before we bring it to them. So sometimes waiting for the team to know about it is too late. So there is a kind of a factor where our capital market team has a much more R&D kind of function, where they like suggesting idea and say, well, you should really look at that. And finally, and then the last one, you know, what the custodian can do. So, you know, we're talking about Zodiac, Komainu, BitGo, whatever your custodian want, are they able to take this coin under custody? If not, how long does it take? Do they have a business case to build for it? Because it costs them money to build for it if it's not supported. And then, you know, can they support staking or not? You know, there's plenty of, so the decision matrix is quite wide. To come back to your example, Babylon is an interesting one, or stake Bitcoin is an interesting one, because it has a lot of merit. It is interesting conceptually. You know, we have always been very innovative on staking and how to bring staking first to market. We did that very well in Europe. The problem with CoreDAO or Babylon is like effectively you're collecting new token, and once you collect new token, your coin entertainment become a basket. So people have to deliver you a basket. So there is a way to go around that. And in the basket, one coin is well known from all the people I mentioned before. And one of the coin is like, what's CoreDAO? So go explain. And there's the same story for Eigenlayer. If you want to do Eigenlayer on ETH staking or restaking on Eigenlayer.
One side you stake your BTC and you get Babylon tokens in rewards, and the other way you stake ETH and you get Eigenlayer
correct. So it's a same story where you end up with like a known entity token. So okay, what is this? And you have to explain to a regulator now what is Eigenlayer, and we kind of like not exactly there. And like, you know, staking, kind of get it, but like you can see how the SEC is like restaking, not exactly getting it. Like restaking, it's another level. So, you know, slowly but surely it's gonna come. It's just like a process of how we take people on this journey.
And maybe to come back on the staking topic, why is it important for you as a company and your clients
to
offer staking, to offer an ETP, ETN, ETC, or ETF that is staked? Do you pass by the staking rewards back to the client? Do you keep it for yourself? Why is and how is staking important for you guys?
So staking is important in the sense that it's an evolution of technology. So doing ETH staking in the US as it is done right now and not distribute staking reward, doing staking in the US and build a product in 2024 and launch a product in 2024 without staking is doing a complete mockery of the technology which has been built. And it's also doing a mockery of the client we are selling it to, because effectively we're telling our clients that we don't even understand crypto ourselves. Because if you are a house launching Ethereum in 2024 without supporting staking, you're clearly showing you're not an expert in that stuff, and you're just here for the experience, but you don't understand what you're doing. And so the idea is like, okay, we understand the priority, and that's why we didn't launch an ETF in the US. We're like, there's absolutely no point. Like, we are not giving, people are like losing 4% or 3.5% on that just alone. It's not making them a service to launch an ETF without the right parameter. At the same time, it will degrade our kind of perception by the market that we have an expertise in that sense, and we just become a supermarket. So we want to stand by our client. We want to do what is good for our clients. You know, you don't go to Hermes and buy a shitty handbag. You go to Hermes to buy a high-end quality handbag, and which is a high value added handbag. It's kind of the same story when you come to CoinShares. We want to sell you high value added product, not something you can buy off the shelf for 10 basis points from BlackRock, right? So it's a very different type of offering. You know, we want to start to be able to offer, you know, very high value added product where people feel that we did the work for them on a different aspect, and we can complement it with the right research, and they see that they are working with us because we are experts in what we do.
And do you feel, because you mentioned BlackRock and maybe them in the US being a competitive product of yours, but maybe them in Europe, as you mentioned earlier, in Europe next year, do you feel that's the main difference of your approach is that you are crypto native, you know your research, you know about you know, staking and other blockchain mechanisms so that you can serve your clients better?
Look, there is no way CoinShares can expect to be competing with BlackRock or Fidelity. They are 40 years old houses in terms of BlackRock. They are 100 years old houses in terms of Fidelity. They have massive distribution scales. We don't have that. Let's put it this way. Let's be absolutely clear. We don't have that. We will never get that. We can't catch up on that stuff. What we can catch up on the difference, like we are expert at what we do, and we bring higher value added product. So going to fight toe to toe with BlackRock on a 20 basis points Bitcoin ETF is an absolutely waste of my time. I've been doing that for 10 years in Europe. We did that very successfully. What we're going to do in the US is going to be very different from what we did in Europe. There is absolutely zero reason to go fight with BlackRock. I'm much more interested in working with BlackRock, actually, where the second client of the Bitcoin trust to help them bring the ETF to the market. So the success of the trust, to some degree, helped the team to justify the case for an ETF. So I'm not going to say CoinShares is responsible for the ETF. That's not what I'm saying. What I'm saying is like we didn't see them as competitor. We haven't encouraged them to go into the journey because by helping them come to market, it was lifting everyone's boats.
Validation.
And it's a validation of the theory. It's a validation of what we do. So for us at the very beginning, helping BlackRock to come to the market was helping all of us and helping the industry. So it was not even a problem to help them. We seeded the product, or after the launch, seeded the product in the trust. They use our research, so we are very transparent, and we don't have an issue supporting them at the very beginning. Now they can they do everything on their own. They don't need us, obviously, but it was a joint journey, and we thought it was good for the industry to help them come to the market. And the price action show you that 55 billion of inflow in BlackRock product was certainly a good thing for the crypto industry at all.
For sure. And again, even if you don't compete directly, how do you see your position in the US market now that you've bought Valkyrie and you're going after this market, which is outside Europe?
It's a very interesting question because people always tell me you don't compete. So we definitely don't compete. CoinShares in the US is managing around 1.5 billion of AUM, something like this. We have a team of 4 people. It's a skeleton team. We acquired the business in March. We turn it around. We have 0 sales team yet. So it's a very
it's very impressive already.
Non-working business. But we have more inflow in the US, pretty much doing nothing in terms of effort to distribute and go to market, which we will start doing in January because we just hired for that. Then we are in the entire European market. Mm-hmm. So the European market is 10 times smaller than the American market in terms of the ETF addressable market. The American market is 50% of the entire world AUM. So when you get these two metrics, as a European company first, because that's where we were born and where we started, if we can go after some crumbs from the American player, which can be big crumbs, we'll be very happy, So it's how do we build it step by step? We don't need to put money first and hope for a good result. We're going to go there in a very staged approach. We have some very, I would say, delimited milestones we want to achieve before we commit more money. Some people are going to say we are too cautious. Some people are going to say you don't understand scaling. The difference is we're investing our own money. So we're not investing as a CEO. I'm investing my own money. I'm still the biggest or second biggest shareholder, depending on the day when my chairman is buying or selling. And so we are always looking after it as, okay, we are investing our own money. So is it better to invest it there or to distribute as a dividend or to give back the money to shareholder? And so this kind of, I would say, analysis is always putting us in a way where we always want to commit the money to where we can achieve the best ROI for our clients and our shareholders.
And for people right now in the US, you bought Valkyrie in March. You are hiring and ramping up the team as we speak. Mm-hmm. Do you feel you have to move the headquarters in New York and yourself?
It's an interesting question. We had lunch or we had dinner last week in New York, so I know exactly where this question come from. The good news is there's a lot of good French hospitality community in New York to look after me.
That's right.
So we're good. Now, all joke apart, CoinShares can't be just a European company. CoinShares need to be an American company. Need to be an international company, and that's go with an American expression of that. The question today for me is like, where do I add more value for the company? And I definitely add more value for the company being on the road and meeting people and trying to just like move the messaging and move the journey and move the kind of needle for CoinShares than being behind the desk wondering if we do the staking correctly. That was a good stuff to do until 2021. The market is very transforming and people want to see me much more in their office and just hide in an office or behind a desk. So it's a very different activity. So yes, I spend much more time in the US than I ever spend, but it's for the good reason. If I was not in the US, we would have never found Valkyrie. Valkyrie came out of a trip to Miami. If we were not in the US, we would probably not have met BlackRock in the early days. They have a fantastic team and they create fantastic products there. So there's plenty of people we met in the industry. If we was not in the US more often, I probably won't have built the lending activity we have today because of all the market maker connection we made over the years. So all in all, I can't really say there is no business to build in the US. There's a lot of business to build in the US. Now, are we going to move the headquarters? Maybe not. But before we move the headquarters, we can move our listing.
Right. And you can still travel back to back, go to some good restaurants, meet the right people.
As long as you're here, it's fine.
Yeah. One topic I would like to discuss after main cryptocurrencies staking is DeFi.
Mm-hmm.
I'd love to see your view of DeFi because you can argue that an ETF, it's a product on chain that you put off chain.
Mm-hmm.
And DeFi trying to put some off-chain product on-chain.
Mm-hmm.
So do you think these two concepts are contradictory? And what's your view of DeFi in general?
I don't think they're contradictory. I think they're all trying to see what's going to survive. If you wind back the clock a little bit, DeFi people were all about there is no yield in TradFi. TradFi is dead. It's all about DeFi, okay? And that was for only one reason. People created token ex nihilo. And all of a sudden, this token starts trading at like some real dollar value of it, which is, by the way, fiat denominated. And they say, oh yeah, we have massive yield in dollar terms. Say, yeah, because some people are just buying these tokens and so it creates a value for your yield. But realistically, the interesting value of your token is zero. So, and we saw that all this token going after the market rally going back to or trending back towards zero. So there is kind of like failure in the process. And I think, I would say 2022, around probably September, you get DAI Foundation. I think it's isn't DAI? It's probably DAI, who was saying, how do we manage our treasury inventory?
Right. And started post FTX.
No, pre-FTX. It's starting pre-FTX.
Pre-FTX.
Like September, there was a first,
and
some first voting happening.
Interesting.
Around, okay, well,
I'll get exposed to T-bills in the treasury.
Correct. So how do you create some kind of exposure to TradFi yield, because there is absolutely no yield, and that's when the yield started ramping up with the treasury, with the US T-bill going up. We say, well, we can do 5% in US T-bill and we can't even have 1% in DeFi. So all of a sudden, all DeFi are kings and TradFi is dead, kind of invert. So the American rate policy kind of like put a little bit of hole in the boat, and people were like, well, how do we get that stuff? So everybody's like, oh, can we just move our treasury from on-chain to TradFi? So everybody was looking for a bridge to sell some stable coin and sell some stuff to be able to invest it in treasuries and get the kind of rates from there, or the yield. Some of it did it pretty well, some of it struggled to do it, some of it had contract to make others do it for themselves. But eventually it was not very successful because it was, there's a lot of friction in that stuff. And that's where people say, okay, well, maybe we should bring that in the other way, where we start creating stable coin with yield and all this kind of product, which kind of like create a kind of idea of like bringing real world assets into DeFi.
That's right.
And you had a lot of like trade financing idea on DeFi and all this kind of stuff, but eventually the kind of stuff which works the best was all the application we saw around Biddle from BlackRock again, which was another prototype. Prototype worked pretty well for them compared to the one from Franklin Templeton, for instance. And then we get all the stuff which are starting to go in that direction. If you look at Morpho, or if you look at Ondo, if you look at all this kind of other projects which are trying to think about composability of finance on DeFi, and that's become very interesting. And at some point, they're going to be a blend which is going to happen. And the question is the when. It's not an if, it's more of a when.
When you mean a blend, you mean consolidation in general, or?
No, I mean by blend, I mean at some point, like the way you consume financial services is going to kind of morph with the way DeFi is being consumed. It is going to take time. The biggest friction point right now around DeFi is this whole KYC issue, which is a kind of if you look at the story of crypto, it was born libertarian because the whole cypherpunk story was libertarian. People realize that libertarian don't really scale anywhere, so we need to start putting KYC on exchanges. So exchanges didn't put KYC, fail effectively or get serious problems. The people who don't want to get KYC start moving to other exchanges and then eventually move to DeFi. And so it's always like the next frontier where KYC is catching up. And eventually, if you want DeFi to work properly, you will need to do some form of KYC, and we don't know what it is. It might be KYC at the wallet level, it might be KYC at the protocol level,
which is kind of already happening. It seems because you can definitely guardrails with KYC, or I just listing or link to a KYC.
You can do that, but nobody wants that. So the problem is like
that's terrible because it breaks the liquidity, but with TRM and Chiensis, you can do this without breaking the liquidity actually. And I think it feels that a majority of the main DeFi protocols are already applying it, and we're applying to our on-chain product ourselves, because there's no way a large VC, reputable in the US, for example, even in Europe, would stake or would use a DeFi product that is not KYT checked.
All right, so I agree with you, but that's know your transfer, and that's know your customer or know your source of wealth, origin of wealth. And so
it's not as deep as the KYC.
That's the point. But like as usual, the question is like how high is high when people tell you to jump. And the KYC people, the AML D5 is like telling you to jump and it's never high enough. And look at how many compliance officers and Binance is becoming like worse than the bank. So I think eventually there's going to need to be a big rethink around KYC and AML and how it works and how it is all implemented. It's not to say it shouldn't exist. It definitely needs to exist because it has some merits and some very good guardrail for other reasons. The question is like, how does KYC and AML evolve with regard to the technology evolution? And like, how the way we are using it is beyond where we are. If you go to a country like Sweden, to go back to Sweden, they basically give you a bank ID when you are born, which is a social security number, which is also your bank account. And at that point, your entire life is becoming traceable, which is very Orwellian in some sort. But, massive blockchain is Orwellian by default as well, even there is a KYC element of it. So the question, all these rules which are written by people not understanding where technology is going is becoming a bit of a problem. But you get the same problem in transportation. If you look at Uber back in the day, they were fighting with every single country on transportation regulation because the rules were writing by 70-year-old people who were used to use black cab in London and not understanding the value of having Uber in London. Eventually, stuff are changing, and eventually, it's moving forward. The German philosophy movement understand that very well and always say that innovation move one tombstone at a time because to get people, unfortunately, to be removed. But if you look at the Trump and current administration or proposal of administration, every single person in this administration has some kind of exposure one way or another to crypto. You will hope that you have that you are starting to see a generation of politician or politician exposed people who are actually very, very closest to what we're trying to achieve and to crypto in general, and try to bring it to a different level. Now, we have to admit that we live and breathe crypto. It is not the most important thing in the world. There is bigger problem, you know.
Is there?
Well, it's funny because I was like this week in Malta, and we were talking to some kind of different people, and I say, yeah, but the German regulators say, well, I think Germany has a bigger problem in February than making some regulation on crypto. So, you know, it's kind of like what is happening in the world at the same time. And, you know, I'm not sure what's going to happen in France with the government we have, but, you know, like all these countries are also having massive political issue to sort out. And, you know, in England, for instance, Brexit has been a massive detractor to innovation. They were saying we're going to build Singapore on the Thames. Nothing of that happened because they were all trying to plug the holes of Brexit and all the consequences of it they didn't see happening before, starting with how to emit a passport and how to travel out and inside and outside of the UK. So crypto at that point is like not exactly on the top of the list of the agenda, and that's kind of a, you know, for people like us who live and breathe crypto, it's a bit of a disappointment. But you know, we always have to understand that there is bigger stuff at the same time.
Yeah, I'm sad it doesn't get much more attention, but you're right. There's a lot of tensions in the world right now that could be growing.
But you know, if Trump do 15% of what he says he would be doing, you know, everybody is panicking because Jerome Powell say he will not put crypto on or Bitcoin on the Fed balance sheet. Well, that's good news because it was never supposed to be on the Fed balance sheet in the first instance. That's not where it's supposed to be done. It's supposed to be on the Treasury balance sheet. So it has nothing to do with the Fed. So, you know, the gold of the US government is controlled by the Treasury, not controlled by the Fed. So it's kind of an interesting dynamic where a lot of people panic, but because a guy says something, but yeah, he just said that because anyway, he hates the ideas of crypto and kind of dump all the hopes. But, you know, people are moving stuff, and if this reserve is happening, it's create a massive draft for a lot of other countries to say, okay, well, how do we get something done here? Because we can't just be seen as being so far behind. So the leadership of the US is always questioned, is always kind of, oh, is the US your leader? The very first thing when it comes to financial services, I was in 2016 in Hong Kong in the regulator office, and they were like, oh yeah, crypto, we're waiting for the SEC to tell us what to do or to show us what to do. And a lot of countries are still looking at the US as a leader when it comes to regulation because they are really scared to do the wrong thing and are expecting the leader, effectively, to show them how to do it. So if you're waiting for someone else to do it, you're de facto considering this person as the leader. And so the US in that matter has always been seen as a leader, and its unperceived strengths is very developed. So even American was doubting their strengths as leader. They don't realize how strong their leadership is perceived from outside. Even if there is some tension on all the topics, but like when it comes to innovation and financial services, there is definitely leadership which is not contested.
And I want to quickly come back on before, you know, we do a perspective of 2025 and maybe a retrospective of 2024. Crystal ball. Maybe last question on your products. You mentioned about BUIDL, tokenized T-bills, which BlackRock introduced to the market, and Franklin Templeton as well. Both Franklin and BlackRock have ETF products. Do you think you might offer tokenized securities in the future as CoinShares? Do you feel it's the role of CoinShares to do so?
My compliance officer is going to shoot me. But no, realistically, so actually we have built an on-chain asset management company. So we have an on-chain asset manager ready to roll, fully KYC'd, fully properly done. It's working on Optimism, it's working on Arbitrum, it's working on Binance Chain, it's working. So we just roll it out on many chains to just almost like do it as an R&D prospect for us to understand how it will work, how people will consume it. We haven't went as far as integrating CDApps on top of it to make sure we were kind of like thinking the KYC leg of it.
Shout out to Florian from CDApps, by the way.
Okay, good. Thank you, Florian. But you know, the team did that properly. And it was a good exercise to just understand where it is going. Now, is there a market for it right now? Absolutely not. So if we remove the KYC, there is definitely a market for it. Now, with all the regulation we are carrying, if I remove the KYC, I'm going to get all the problem. So I'm a little bit between a rock and a hard place here. However, we believe there is a view and there is a way to go this way. And the same way as tokenized funds are going to take their place. Now, am I going to launch yet another tokenization platform? Probably not. What I believe going to happen is like, and again, I might be completely wrong, but we're going to see the key players in the market like Bonnie rolling out proper tokenization offering, and they will be the, they already have the volume of clients, they have all the funds, they have everybody who wants to tokenize stuff as clients. So the day they're going to roll out, they already have a custody solution in-house. So the day they're going to roll out, and they have the issuing agent licenses, they have all the licenses to do it. The only difference is like, instead of issuing it through the DTCC, they will issue it through effectively an on-chain or on-chain.
So you're quite bearish for all the RWAs companies trying to create tokenized securities setup and distribute it themselves, because the big guys will come into the market.
Eventually, it's a question of addressable market, and like, what is your addressable market, and what is your capacity to catch an audience very quickly. If you're just a startup, and you started on that for a long time, it's going to be very difficult. Like, if you look at Securitize, it's a great company, they did a great job, but it's, if BlackRock didn't invest in Securitize and effectively launch all they did with Securitize, nobody would talk too much about Securitize. So it's a very unfair, effectively, situation, because people who have billions to deploy with effectively changing game very quickly. So, and you get many company, the amount of tokenization project in ADGM right now is crazy. Coinbase get their own, there is one by company pretty much. Until you need to be an issuer and a tokenizer at the same time, or is tokenization a service? It's a little bit like staking. Like, imagine CoinShares not doing staking. Like, you call me and say, look, I do that very well, just pay my fee and just let's do that together instead of trying to pretend to be an expert. So like, work with the best in class to get the best product. Don't try to pretend doing everything. And I think that's where it's going. It's like, it's more of a question of like, okay, who is doing it the best? And let's work with the best on that stuff, so as you get the seamless product for the investors. So
I would love to work with you on that combined product, and hope the collaboration.
On tokenization,
will be fruitful. No, on tokenization.
You want to become a securitized competitor?
Yeah, no, on staking, of course.
We're already working together. So
yes, that's
why work more.
No, for sure. I mean, if you tell me, okay, it's on camera.
I always love work with you.
Okay, so the two last but big questions.
Oh God.
This year was quite an intense year.
Mm-hmm.
January launched of the ETF in the US.
Mm-hmm.
Bitcoin to the roof, to the moon, 100K and plus. Yeah, what's your retrospective of 2024?
It was really the year of the unexpected. I remember working with my business partner along the harbor in Jersey, and we were kind of fantasizing, saying, okay, that's the boat when Bitcoin reached 400, and that's the boat when Bitcoin reached $1,000, and like the boat when Bitcoin, like, in our projections, it was never Bitcoin 20,000 or Bitcoin 60,000 or Bitcoin 100,000. It was always like very conservative kind of next step. The same way analysts don't give you like a target price for your equity, like 500% out, to just give you like, okay, 20% uptick. And so what we've seen, the inflow we saw, bearing in mind people in the US have been deprived for good product for 10 years, is kind of a realization that there was a need for that for a long, long time, and that the SEC has been depriving the whole industry and have been depriving Americans from achieving financial freedom in a very, very interesting way. That's point number one. Point number two, I think the election of President Trump is going to be hopefully very transformative. It's politics, so until stuff are done, they're not done. As we joke often in asset management, the check is in the post, and we will see if the check arrive. I think he's surrounding himself with like people who understand what we are actually trying to achieve, and how we try to transform how people consume financial services and consume payments and consume finance in general, but that's also go beyond finance. and we'll see how it goes, how it deploy. He has the luxury to have the House and Parliament, the Congress, and effectively the Supreme Court as well on his side. So it's kind of a first since, I don't know, since Gerald Ford, since it's like it has long time since we get this kind of result for second time elected president. So he knows the gig. He's been there before. He has the capacity to move stuff very fast. Let's see if he can do it. And he has the support of a lot of very successful people as well around him. So I would hope we're going to see a different outcome. Time will tell. So that's where 2025 would be interesting to watch.
And do you have main priorities you look at post-election that now you think it's actually a very good time for crypto and for your company to thrive?
Look, we're a very small company. We're just very focused on what we're doing as a small company. We don't run the US government. So we just not look for stuff like this, but we're just trying to make sure that we stay agile, stay focused, don't get complacent, remove any kind of temptation of hubris in what we do, and just stay focused for our clients. It's very important for us to deliver the best product to our clients, and that means not being complacent and staying on top of our game. We were laughing last week on Friday with some CEO of asset management company, at CoinShares we like to get shit done, and sorry for my French, but that's kind of what we do. It's we know how to roll our sleeve and to make stuff happen. So we're gonna keep doing that.
And I can testimate, amen, on this, because I have collaborated with you for a couple of months now and seen you on calls and seen you on so many different topics, always being on top, always checking with your team, always being so deeply technical on the product you offer, and also understanding as well what you sometimes don't know yet, but will know in the future. So thanks again for your time, man. And
thanks, Laszlo.
It was a pleasure.
It was great to be here.